Welcome to this video today, which is all about institutional order flow in the Forex markets. It's a big buzzword on the net. The concept is that you need to find out the levels where the big boys are going to be trading off and then follow them to make a profit. And you see lots of people do charts and they'll put a level there on the chart which they say is significant to the institutions. Then they'll show where the institutions sold and took their profit. Okay, now that actually it just simply has got no basis in fact, and I'm actually surprised that so many traders believe it. Why is it not true? Well, first of all, institutions do not all trade the same way. Okay, they might trade off the same levels, but they don't trade all the same way. And also, the big boys like the hedge funds and the banks and so forth are the biggest segment of the Forex markets in terms of volume. But the margin of winners is very, very small. Okay, so only 5% of traders are winning. Okay, and this means that only a small percentage of funds are winning. This is borne out by the facts. You can just go and look at the managed fund indexes. Now let's take hedge funds. These are considered by many to be the elite traders. And just if you look at the hedge fund index of their performance, you took it from 1996 to today. If you'd have invested in an average hedge fund, you'd have actually been twice as well off had you invested your money in US T-bills. That means that the composite of hedge funds has only done low single digit gains. But it gets worse, okay, because that ignores all the funds that have been shut down through losses, and there's a huge amount of them. So the idea that hedge funds as a group pile up huge profits is just totally a myth, and it's the same with any managed fund index. Just go and check it out. So you do get some hedge funds and you do get some bank managed funds that do well, but overall the performance is dire. Okay, so I would actually ignore any of these tutorials that tell you that all the institutions all trade together, they're all coming in the market at the same time, they're all going out of the market at the same time, making a bundle of profits. It just got no basis in reality at all. Now, in terms of taking advantage of institutional order flow, you can do it. And there's a great way of generating high probability trades. And it's all related to a free report you can get. It's issued by the US government. It's called the Commitment of Traders Report, CFTC Net Traders Positions. You can find it on the cftc.gov site, and it is the most valuable free report you can get in Forex trading. So why is it so valuable, and how does it help you take advantage of institutional order flow? Well, the report itself is just based on the futures markets in Chicago, the IMM, which are really a snapshot of the overall Forex markets. Now, on the futures markets, you can trade Forex in standard lots, and it's a favourite place for hedge funds, for example, to trade. Why? Because the regulation is superb. These exchanges have been around for a while. And on the report itself, you can see the positions of the hedge funds and other large institutions, and they fall under the title of large speculators. Okay, and their positions so big they have to report them to the CFTC. And what you want to do is look at the report and see how long or short a currency they are. So it'll give you their longs and their shorts. So you just want to work out the ratio to see how long they are against how short they are as a ratio. When you see them heavily overweight, either long or short, then you actually want to be going against them. Okay, now in terms of these big funds, they tend to be very wrong at important market turning points. So what you want to do is wait until you see a ratio of where they're very heavily long or heavily short, and then what you need to do is compare it to another group on this report who are called the commercials. So who are the commercials? These are hedgers. Okay, they're not looking to make money in Forex markets. They're looking to hedge a cash position. And they tend to be very right at market turning points. And I think the reason they're right is the fact they're not trying to make any money. They're just hedgers. They're not motivated by greed or performance like the large speculators. They have a deep understanding of fair value. So when a currency moves too far from fair value, they will shift their hedges. Now, if they oppose the speculators, let's say the speculators are heavily long, the commercials are heavily short, then you actually have the potential for a turning point. Now, you need to look at the levels on the charts and basically go against the speculators. You need to obviously not just go in and just go short against speculators if they're long. You need to obviously time it on the chart, but what the setup on the CFTC net traders positions is telling you is prices have moved too far from fair value, speculators have taken on too big a position, and a turning point is near. Sounds very, very simple. It is very simple, and it's probably the best way to take advantage of institutional orders. You can see how much the large funds have got of a variety of currencies, and if they have got too much and your chart is showing you, let's say they bought and it's at a bullish extreme, you want to be going the other way. I think there is a bit of a misconception in terms of Forex trading, and obviously I mentioned it earlier about the big funds all trading the same way, which is just total myth, and the fact they all make money. This isn't the case, and a lot of people might be thinking, well, how do these hedge funds make money? Obviously they're not making money for clients. How do they do it? They just do it with fees. So basically you'll find most over trade, they're more interested in fee commission than they are in money for the client. And I think there's a bit of like I said, hero worship of these big boys. There's no need to be in awe of them at all. If you want to find the big boys that can really help you, basically in the markets, it's the commercials on the CFTC Net Traders report. If you look at the commercials and see what they're doing against the large speculators and go with them at key support and resistance levels, you will find that you'll generate some really high probability trades for profit. So thank you for watching this video on institutional order flow. If you've got any questions or queries, please feel free to email me. Thank you.